Our neighbors to the north largely escaped the financial crisis that gripped American banks. Here with us right now to talk about how they did it is Canada's top banking regulator. She is Julie Dickson. She is the Superintendent of Financial Institutions in Canada and has been described as the most powerful woman in Canadian banking. So, Julie, great to have you here on Street Smart. Good afternoon.
Thanks very much. Good to be here.
It is kind of staggering when you look at some of the numbers in terms of, your banks, how they escaped, your financial institutions escaped the financial fallout that everyone else, it seemed to, in the world had to deal with. How did you do that?
I think there were three things. First, good capital rules, leverage rules. So regulation and supervision of institutions, very important. The institutions themselves had very good risk management systems in place, so I have to give them credit.
Right.
That's important. And lastly, I think we had some good government policies. In particular, we subjected ourselves to outside assessments from the IMF over the years, and we have a very different mortgage market. So in sum, those were really important factors.
And I just want to stress, because for any of our viewers who may not be familiar, I mean, none of Canada's banks have collapsed or required bailout money during the financial crisis, and 6 of your largest Canadian banks have recorded about $22 billion in debt-related write-downs. That compares with about $1.28 trillion in losses by banks and brokers around the world. Let me ask you, I mean, it's just staggering the differences between what you folks have seen and versus outside of Canada. What do you think, as you look at what's happened in the United States specifically, what do you think they got the most wrong?
Well, that's a pretty hard question to answer. I think if you look around the world, capital rules were probably an issue. They were too low in a lot of countries, particularly common equity, core tier 1.
Why do you think that was? I mean, how did you know not to keep them that low or require that they be that low?
It's a very good question. I think over time, we had people at OSFI who had been with OSFI for a long, long time.
And OSFI is?
The Office of the Superintendent of Financial Institutions. They had always felt that common equity was important. We had a rule that said 75% of Tier 1 had to be in common equity.
Right.
And I think that other supervisors weren't as strict as that, in part because international rules only talked about a majority, or so it's a big difference between, say, 51% in common and 75%. So that was one reason. We tried to keep an eye on securitization as well, even though it was off balance sheet. And a very different mortgage market. I mean, there are big differences in the Canadian and U.S. mortgage markets.
But when you look at the U.S. market and the financial system, I mean, where would you put most of the blame? Is it the regulators, the various regulators who are supposed to oversee all of the U.S.'s banks, or was it the CEOs at the companies, or a combination of kind of everybody?
Well, I think management and boards are the first people to look at. They are the ones making decisions about what to do in those financial institutions.
Right.
So the first, the most important people in the sector would be the people running those institutions. I think that supervisors have a tough job to do, especially if you're not supported by market discipline. And I think that over the years we've all learned that market discipline is a problem. Markets are huge, and if they are not disciplined and not watching the risks that are being taken by financial institutions, yet funding that through equity and subordinated debt, then you have a big problem.
Well, that brings me to my next question, because all of the financial regulatory reforms that are being kicked around here in the United States. We had Senator Chris Dodd just coming out. I mean, do you feel like that they are talking about the right proposals to prevent another financial crisis of the magnitude we just saw?
Well, they're talking about the too big to fail problem, and we are all talking about that globally. How do you get market discipline back in the system? So I think that is the right thing to focus on. They're focused on living wills. I think that's very important.
But are they taking the right steps, you think, to get to that point to ensure?
I think that I haven't seen all the details, so I'm not sure whether, if you look at all that, whether it all pans out. But the one thing that the U.S. has to deal with that we don't have in Canada is who regulates the banks. There are a number of different people involved. In Canada, if you call yourself a bank, you're regulated by us. There's nowhere to hide. There's no escape. So I think that was very important in our success.
Very clear lines.
Yes.
All right, we're going to have to leave it there. Julie, thank you so much. Appreciate it. Julie Dickson, Superintendent of the Office of the Superintendent of Financial Services in Canada.